All right, guys, welcome back to the channel. Today we've got a massive update, nice and condensed. We had the news overnight around the interest rate announcements that have come out from the US, remaining on hold here at 4.5%, something that we've been anticipating based on what we're seeing with the US dollar, with the bonds, and of course the yields as well. So without further ado, hit the like, subscribe to the channel. We'll kick it off with some of the economic announcements and then get into Bitcoin, the stock markets, the real estate cycle, commodities as they continue to climb, and of course the beloved favorites of the degenerates, the altcoins. But most important stuff first, which is what is driving the markets. Of course, the charts first and foremost, but the headlines as they always come out. And people are most interested in these things are, at this point, the federal funds rate, 4.5%, hasn't gone anywhere. Not much has changed on that front based on the things that we've been covering here on the channel because of the pressure that we're seeing building in the background here for the US. Lots of things are slowly beginning to break. Nothing has broken yet. Cycle continues up. Trends remain up. So I don't see anything changing there. I don't see anything changing now, not greatly for the rest of 2025. There are still 2 interest rate cuts expected, or you've got the probabilities here from the market, but this can very quickly change and head back to the right hand on this chart. This is the number that we're watching here, 4.25 to 4.5%. And at the next meeting in July, it seems unlikely that the Fed's going to cut rates again, even though inflation had been coming down, but still not yet at the target rate that the Fed is targeting there. But nonetheless, there are still things that are not doing too well, as we've covered with the yields and the bonds. I'll get to those in just a moment. But even so, basically, doesn't look like they're going to get any sort of reprieve for those interest rates. Is that affecting Bitcoin? Not necessarily. There was barely even any volatility on the day. You can see the current day for BTC had next to no change from the open to the close, and the range of the bar was one of the smallest that we've seen throughout this entire consolidation, just $2,000 for this entire range. So really, it doesn't seem like the market cares too much at this stage, or they're just waiting on the next thing. And the next thing, well, what we've seen in the background, of course, is the war. That hasn't really taken any effect on the market yet either. Whether that is still also loading, we'll have to wait and see. If that is the case, then I'm just watching those current support and resistance levels. The first one being the lows here at around $100 to $101,000. That is also my reference range for the double top. So this is the range that I'm looking at here, right through that middle, because it comes out at that small daily double top, projected down. Also, that 100% level is at $100,000 as well. The market still trades around the 50% level here at around $105,000. So this could all just be further consolidation. So far for BTC, just looking in this price range between 100 and 100 and call it $12,000. That range is about 42 days now. So that's 6 weeks in this range. Can it keep going? Well, yeah, obvious answer is yes. But when we look at for the support and resistance levels, the downside here I'm looking at is 100. The next target to that downside still remains at the mid 90,000s. That was the previous support level before Bitcoin took off to that most recent all-time high. Plus, it is the 150% level of the double top. So don't worry if this is sort of going above and beyond. Just know that you've got those numbers to look at, 100, 101. If there is a breakdown there, then we watch for 93 to 94. If that's still the case, it's still in a macro bull market. So any of this sort of fear to the downside is not necessarily the worst thing. It's just a healthy pullback. Once, or if, I should say, if it breaks 93, that's when you can start to get a little more worried. If the price remains here, you start to get closes between $85,000 and $93,000. So I'm talking about daily closes here, weekly closes in this zone. That would be a worrying sign for the Bitcoin bull market. As it stands, we're still at these high levels. I don't think there's anything to worry about, even if the market comes down. And even if the fear and greed index continues to drop off here, it would just be a matter of the sentiment resetting after a nice move to the upside, hitting that extreme greed for that single day there around the all-time high. For the longer term outlook here on the weekly chart, still significant run up to the upside, just holding above 50% on the extension. So nothing really too concerning here. The same numbers apply as I just covered, so I won't repeat those. We're still underneath the long-term resistance level here. What I'm watching out for is any sort of consolidation now at these higher prices, 90, 100K, all the way up to that 110, 100 sort of 12-ish thousand dollars. Consolidation here for the next move could bring on some significant moves to the upside, 120, and then the mid $130,000. That's basically where I'm looking out for Q3, which could eventually lead to that final peak. This bull market has been going on now for 2.5 years. It is not early. And those that are waiting on altcoin seasons are probably going to keep waiting unless things change for Bitcoin, unless things change in the altcoin space, and unless there is more money that flows back through from USDT dominance. I'll cover this in the next videos as I've got a lot to get through in today's video. The dominance, as I just talked about there, this could be a very, very interesting one and not great for altcoins. For this entire cycle, it's continued to climb here to 65%. Of course, everything going on in the background with the macro, looking at the interest rates and the bonds and the yields, all that stuff matters. But for the altcoin season, they need to see some sort of loss on Bitcoin dominance. And there has basically been no loss here for the entire time, all the way up from 2021, 2022. Now, the level that I've got on the chart here is at roughly 71 to 72%. For a round number, let's just call it 72% on the dominance. This could keep rising. There's about another 10% to go for BTC to get to that next resistance level. And through the last 8 years, using each of those peaks there, 2017, 2019, and 2021, have all found some level at around 71 to 72%. So unless Bitcoin rallies here, we find some resistance and fails at this point, it's probably unlikely that altcoins are going to see any sort of significant alt season. Along the way, they've seen a month here, a month there of significant moves. In some cases, a couple of months actually, November, December 2024, good example. But until this point, it doesn't seem likely that there's going to be any sort of significant move. So keep that in mind as we continue to progress throughout this cycle. Now, the next thing on this is a breakout. So we've got one chance here. Maybe it gets rejected. Altcoin season goes nuts. What happens if there is a breakout here of 72%? There is pretty much open ground all the way up to 95%. Okay, that sounds absolutely insane. That means the rest of the cryptocurrency space would be worth 5% of the entire market cap of cryptocurrencies. Stranger things can happen, but if I show you this chart, it's the same chart inverted. We do see the support line, again, obviously it's 72, but when you see it in a different light here, you can see that this is clearly in a downtrend. It's clearly had a rejection at 39% and has continued to slide this entire time, continuing to put in lower highs and lower lows, which just, because it's inverted, means it's a strong move for BTC. So when you flip the chart, it just gives you another perspective of what we're looking at here. Plenty of support came in, it's continued to rise. 72% is the next key level there for BTC. Now, today we've got the Bitcoin report coming out to your email inbox. If you want to get an update on that, link is in the top of the video description and you'll receive that Bitcoin report this afternoon. Okay, moving on with the crypto data. The liquidations here are around $250 million. So not really much has changed over the last few days. We had a higher than average day for the longs getting liquidated. And for now, it's basically trading in an average range. Therefore, you're still seeing it in terms of the price for BTC. We haven't had any sort of breakouts here. The other thing is the exchange volume also trading within a range. We haven't seen any breakouts yet of the exchange volume. Slightly higher lows, which is a good sign, but the highs are getting lower. So could be in for something like we saw September, October, November. There was also the period through June, July, August, pretty damn boring, a bit of a spike out, and then it rested again for several months before we got those massive spikes into the $108,000 top. Nothing to suggest that things are changing for Bitcoin at this stage. but there doesn't seem to be much interest still in the space, which affects altcoins more so than BTC. Another interesting chart here is from Shapiro Crowder Market Report. It is the COT data for Bitcoin and Ethereum. The red bars are the commercial traders. The blue are the large speculators. The blues continue to be heavily short, and the large speculators continue to be heavily long. We generally see the large commercials, these are commercials, get it right more often than not, but it's not a standalone system as it is. Same deal for Ethereum here. Commercials are heavily long, large speculators are heavily short. They typically get it wrong. Here is Ethereum going down. Here are the the commercials shorting the market, getting it right. Whereas the large speculators continuing to long this market as it's falling, getting it absolutely wrong. In some cases, they get it right, as you can see here. So it's not a standalone system as it is, but it lets you see where people are basically positioning themselves. So on the back of the interest rate announcement that paused at 4.5%, the 10-year yields have remained here basically at 4.39, 4.4%. The 30-year yields, same sort of deal here. Haven't really had much of a movement today at around 4.89%. So still higher than what the interest rate is in the US at 4.5%. And as for the bonds, they've also remained pretty well steady here at about 113. I do recall, and I suppose you guys do as well, the mainstream headlines around all of this collapsing happened at that low. And as you've been following, maybe you have, hitting that subscribe, there's still around 30% of you that haven't hit the subscribe button yet. At that point, there was a lot of people expecting further collapse. But we were saying here on the channel, it seemed like, I think longer term, we're going to see further downside. But when you have a lot of the retail crypto channels or retail media outlets, whatever it might be, that generally don't talk about this and they won't bring it up again until there's another headline, you can almost bet that it's some sort of local low, or in the case of the yields, some sort of local top. So it was around that point on the 22nd of May, which occurred at another Bitcoin top as well. So how does that reflect on the stock markets? S&P 500 basically still doing its thing. Not much of a change yesterday. Even with the interest rate announcements, the market closed marginally higher, basically a flat day there, and also basically flat compared to the day before as well. Same thing for the NASDAQ. The positive here is that you're basically a few percent, in some cases less than 2% away from a new all-time high for the stock markets. And an interesting thing here is, if you think this is all going to implode because of the potential war going on and further breakouts in Iran, the US potentially getting involved. I even saw posts from Financial Times that the UK is looking to get involved. If you think this is all the beginning of the next World War III, then you've got a pretty good chance here to sell out of everything if you're in the stock market and start to short the thing. Look at where you're at. You're at these highs. But longer term, at least from what I could see, I think there's much further upside to go here, especially if you're looking at sort of 6 to 12 months. Sure, we might get some corrections as we've been tracking here with our 5-year trend and our 20-year trend. We're looking at some sort of correction here over the Q3. You've got this pullback late Q2 into June, and then July gets a little bit rough before we see the upside resume. But I think longer term, there's still a lot further to go, as we can see with the 5-year cycle, the 20-year cycle, and basically where the market is currently positioned, very close to a new all-time high. All right, to burn the eyeballs, sorry, we've got a white chart in the background here. The risk on appetite is back yet again, just according to the risk appetite index. When this thing hits its level underneath 0.2, the reading essentially is around some sort of low area, and the market is ready to resume another uptrend. Now, there is a couple of signals here that didn't work out. That was in the face of 2008. So you already had a downtrend in the workings. That's this little area right here. But every other signal there has resulted in pretty significant upside. Average returns and median returns here, you're looking at 13% and 16% with a win rate of about 80% 1 year later. You're looking at 6 months from now, so basically December 2025 or June 2026, using the 6 and the 12 months, You've got another 80% hit rate, 3 months later, 80% hit rate, 2 months later, 80% hit rate, 1 month later, 80% hit rate. The thing that it's not good at forecasting is very short-term moves, and that's why I generally stay away from the very short-term moves. 1 week, 2 weeks later, basically a coin toss here. And you can see there, the rest of the results, especially in the case of 2020, resulted in a 46% increase to the upside. So we've had the interest rate cuts. Nothing necessarily has changed at this point. The US dollar may in fact have its rally, as I alluded to in the intro. We're at a 3-year low that we've talked about here, and eventually you would see some sort of bounce and the market to at least stall, consolidate the move. It's been going down since January 2025, nearly a 6-month move to the downside. It definitely needs some time to rest and consolidate this move. Bitcoin has been going up this entire time. Maybe this could be a bit of pressure that that is then put on to BTC and other risk assets if the US dollar is able to rally here, even ever so slightly, to 100 or 101. The real key level there, if it breaks out of 101 and comes up to test 104, that would be the pressure onto those risk assets as well. But nonetheless, we are still in the winner's curse phase of the real estate, 18-year real estate and economic cycle, working our way into this peak. Potential blow-off top moves here, as I've looked at with BTC, should we get through this breakout, and then that breakdown for the USDT dominance. I'll have a look at that in just a sec. But within this last stage of the peak, or the 18-year cycle peak, before we get into that correction, we're also very lucky to be living through a commodities, I'm not going to call it a super cycle because it's not. It's basically the commodity cycle where you have roughly 20 to 30 years up and 20 to 30 years down. Now that ended the down period around the early 2000s. You're going to see big swings in the overall move. But like you can see here, this is the Goldman Sachs Commodities Index. It's a basket of commodities. The chart only goes back to the 1980s, but you can see the roughly 20, 25 years ended in about 99 to 2002 there, with the low and then a higher low formed, and then you're off to the races again for the next 20 to 30 years. We are coming to the end of that now. So if all these cycles are coming together, you've got the commodity cycle heading up. Bitcoin, at least the way I see it, I think the market still considers it some sort of commodity. It hasn't established itself entirely yet, but in terms of the space, this could be that end of the move that Bitcoin's also going to receive some benefits from. Obviously coming out in 2009, and now we're still here, find ourselves in 2025. If this breaks out, getting to the point, this could also be another significant move to the upside, which is all part of the cycle analysis that we do at TIA Premium, and looking at how we can establish our portfolio positions to make the most of these cycles. Links to that in the video description. But the next number I'm watching here is around 600. And over the last few weeks, we've seen the commodities index break out of the 50% level. 1, 2, 3. The majority of this is oil. You've got gold in there, of course. Silver is in there. You've got a lot of these metals that are being used in AI, which of course is also doing very, very well. Silver is used in the hardware. That has been climbing higher, as we've been looking at here on the channel, and breaking out of a 13-year high. Doesn't mean it's just going to shoot to the moon. It isn't like just some sort of altcoin. Having said that, if I've got the market caps here, here are the market caps. It is $2 trillion. So it could trade like a Bitcoin or an altcoin. And in terms of the percentages, last cycle in the correction, so 2008 global financial crisis into its final peak there in 2011, that ran up nearly 500%. And from the low in 2001-ish, 2002, it did 1100%. So if you were able to hold on for 10 years, that's not bad. 100% a year, yeah, that's very difficult to do anywhere else in the world. So it's not looking too bad here. Is that going to happen again? Of course, I would love it to, but of course the market's going to tell the story. And this chart here, as I just showed before, is basically just a rough idea of the commodity cycle. I won't look at it too long because it's going to burn our eyeballs, but you can see sort of 60 years between those peaks, 1814, 1860. So there's 50 years there. Now you've got about 55 years. Then you've got about 60 years. This one isn't the exact Kondratiev wave if you're looking for that, but it gives you a rough idea of how these cycles tend to work. There isn't really much life here except that it's holding above the 50% level. That's this $810 billion number that you can just see here. That's the 50% of this entire run up. While that holds, things are still okay. If you start to see weekly closes under that level, this would be much, much weaker for the entire altcoin space. Anything above 950, 960 billion, that's going to be the chance of the alt season. Otherwise, you're basically just playing a losing game here, broadly speaking. Now, of course, there are some stronger alts, but once they start to break down from 50%, probably a good sign that they've got further to go, and it would be advisable to assess your risk management on those trades. You just don't hold things forever, as is the case with SUI at the moment. It is breaking down from this 50% level at $2.90. Couple of days now. Generally, I like to see at least 3, but more importantly for these alts, because they move so sporadically, it's generally on the weekly chart as well. You know, this thing could run all the way down to 230 and then bounce back. 230 is around the consolidation of the higher low, and then it had to move higher. So it's not the end of the world. Even if it puts in a higher low here, it could still have more time here to consolidate. So although it's under the 50%, to me, that's just like there's more time to go here. It's not ready to spring to those new fresh high prices. Spinning it back to the total cryptocurrency market cap charts. This one here is your total market cap excluding Bitcoin, ETH, and stable coins, whereas this one includes the stable coins. No Bitcoin, ETH, but includes stable coins. And so I look here, well and truly under the 50% level, and of the current move, low to high, it's still just hanging on here around 580 billion. The major 50% of the entire bull market is at 560. So closes underneath this level, not going to be great. Keep an eye on that for your portfolios as well. The others chart, so this is altcoins excluding the top 10, which excludes the big ones and the stable coins, hit another 4-year low. So you've got another daily lower price and daily lowest close today at the moment, just getting a tiny bit of green, but this thing just keeps going down. The idea here is that you want to be ready when it's able to break out of some significant levels. There have been times that altcoins have run. That time is basically that in November and December, and then over a longer period here through 2023. But the altcoin seasons are pretty much those fast moves that everyone is looking at, and in the other times, no one's really looking at it. So at the moment, everything is still heading down. There has been no signs of a low, and any of these tiny little rallies have been met with lots of interest from any altcoin influencers just trying to salvage any sort of position they have left in the market. Ethereum, on the other hand, still holding out all right, $2,500, hasn't broken above my key level of $2,900. 1, 2, 3, 4, 5, 6 into our 7th week at roughly the same closing price thus far. 4 days to go, still in an okay position here. But as I looked at with the rest of these altcoins, not the greatest. You got SUI breaking down from the 50%. Solana still not looking too crash hot here, still below its major 50% of $151. And XRP above the range 50% at $1.84, so now sitting at $2.18, so still holding out there. But when you compare them to their Bitcoin charts, they're sort of very anemic here, just hanging on by a thread in the case of XRP versus Bitcoin. SUI continues to break down. Watch for the 2,300 level on the Satoshis here for SUI. And as for Sol, it's also breaking down. Lower highs, lower lows, no real signs of putting in a bottom yet against Bitcoin. So basically, tons of risk, no reward against BTC at this stage for all of these altcoins. And this bear market on Sol versus BTC started back in March of 2024. So it's been going on for over a year now and breaking underneath the 50% level. So although altcoins are struggling, absolutely getting slaughtered, some of the majors are also getting slaughtered after significant runs up. It's always important, if you've made it and you've been able to get some profits, take those profits from those altcoins. This cycle has been very much looking at favoring the traders as opposed to the buyers and the holders and forgetting about the coins. They basically are riding up and riding back down. As for the stock markets, still looking relatively good. Cycle well and truly intact here. Bitcoin still doing its thing, holding steady at around 105. Even if we get the correction here, I'm not too concerned unless we started to consolidate underneath $90,000. Like, subscribe, and we got the free report coming out today. I'll see you guys back here at the next video. Until then, take care and peace out.